Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, the 27th of September, 2018 at 4:40 p.m. Central Daylight Time. If you're like me, you know, I watch during the day, I read like mad, I watch financial TV, and I watched and am watching this Brett Kavanaugh fiasco that is going on. There are times when in America everybody has a right, but you get embarrassed by some of our politicians. I'll leave it at that. I can't believe it. And I feel so bad for the man, his family, and all that is going on. And if you want to see bad politics at work, it's been on all day, so I don't expect you to be able to go back and view it. But I can tell you, in this building, all I saw were people huddled around TV shaking their head. Pretty interesting. We'll see what's the outcome. More important to the financial markets, after you get an FOMC announcement like we did yesterday, sometimes the impact of that is what I call, it takes a while to go around the world. Why? You had the Fed announcement at 1, you got 1:30 the press conference. It's great when it's Central Daylight Time, but what do you do when you're in Asia? It's a long difference in time. Are their markets open? Certainly the European markets are closed. People sleep. Then they wake up, they see the wording, they start thinking it through, and the markets begin reacting. You got to remember that. Reports that you get, like a cattle report or a USDA grain report, that's different. It's affecting your domestic market. These are different. Dollar up sharply, most European currencies down. Problems for the euro. If you took a look at what the five-star movement in the league did, looks like they're going to approve a budget that's going to take their spending, their debt as 2.6% of GDP. Their current minister, that's their economic minister, did not want that. He wanted 1.6% and said he'd consider resigning over it. So much for that. It looks like they're going with a big number. And remember, they're just behind Greece in the amount of debt to GDP. It's a problem in the EU. If you look at the S&P, all the way up to 2934, and we're off that top. 14 points. I mean, it's a sneeze in the market. You still have an overall pattern of bullishness. You can see how the market's riding these connecting points of resistance, hits it, and just seems to back away. When we look at the chart action and put on this, the swing lines, the pattern is different than what you see here. When you come to this, you've got a pattern of lower highs and lower lows that is bearish. You negate that pattern if the market can take out 2936. As for where the support is, how often, if you're a viewer of this, do I say when a market is up and over the 18-day average, often, I wish I could use the word always, it would be wrong. It doesn't work that way. Often, the first challenge of the 18-day average is where the support comes in. Today's low, 2907.50, 2907.11 is the 18-day average. I'll call that the challenge. Doesn't mean it's not going under it, but yesterday you made a run also into 2907.50. So you're stalling there for a moment. We'll see what that all means. As for the Bollinger Bands, the upper targets, and I like to use Bollinger Bands as potential targets if the market's moving to the upside, was hit about a week ago. Since then, we've fallen back to regroup. How's that for the word? At the 18-day average of closes, as momentum, which was overbought, is working itself down. And as long as the numbers are not over 70, I consider the market not overbought. Anything over 70, it is. So they've worked themselves away from being overbought. The NASDAQ has been bullish. Higher lows, higher highs. Today, if we take a look at yesterday's high, 76.68, the upper Bollinger Band was 76.79. Today you got to the upper band and you basically held up there. The momentum is overbought in this market. The trend is up, and I think you're more or less in a sideways action. I'm certainly not bearish, these stock indices. The only one that's really had weakness to speak about has been the Russell. We'll get there in a minute. In the Dow, you're correcting an overbought condition, and you're correcting one where you had what's called an embedded reading that you've lost. You lost it yesterday when the market saw these numbers close under, one of the numbers under 80, and it lost it again today. Often, when that occurs, price in the 18-day average make a run at each other, so I don't know that that runs through. The way that I'm viewing the chart, you should not take out 26,820 if my hunch is right. That's all it is, a hunch, before you hit the 18-day average of closes. After that, anything can happen. We'll see if I'm right on this idea. Here's the weakest of the indices, and it's been the Russell with the lower highs, lower lows, small cap stocks. Interest rates moving up in America, been working against that. That's one of the fundamentals that you think about. Where's it going? Well, it's been hitting the lower Bollinger Band, trying to extend to the 100-day average as it's getting itself oversold. Trend down. In the VIX, you're stuck at this 18-day average of closes. I'll call this chart right now neutral. You have the higher lows. You don't have necessarily the real higher highs. Today's high at 1,300, if we come back here, did take out 1292. So I'm right in putting the arrows pointing up with the higher high, but you're staying away from getting over the resistance of the 100-day average in green and the 18 in the red. So I'm going to call the market having moved into resistance. The bonds stepped out of their downtrend. Didn't we talk about the fact going into the FOMC, it's dropped so much that maybe it's the old sell the rumor, buy the fact, and all of a sudden with the action the past 2 days, it's basically what's happened. You lost the embedded reading today. If we come back to yesterday's action Wednesday, both numbers were still under 20, not so today. So if they stay lost, you know what I'm going to say. Often that leads to price trying to get back to that line in the sand, the 18-day average, to regroup and think of what to do next. The same identical things happening in the 10-year notes. TLT, same identical thing happening, except in this case, you actually have higher lows, higher highs. In the others, you've got a lower low and a higher high. But it doesn't matter. As long as you're under the 18-day average of closes, you're not bullish. It just ended the downtrend, at least that leg of it. In the dollar index, the first move back over and close over the 18-day average of closes since literally all the way back into this time frame, the very beginning of September. So has the dollar had that break that everybody was talking about and seen it end? Is this the beginning of something else? Well, my guess is, the word is guess, you're going to see traders try to support the market at that 18-day average. They won't want to see it under 95.05. That would break this setup, and momentum has sparked itself to the upside. It's the flip-flop in the eurocurrency. Lower highs, lower lows. Now the resistance has become now the 100-day average up to the upper Bollinger Band, momentum pointing down. If the market got a leg of push to it to the downside, a possible target would be back to the lower Bollinger Band with resistance 117.15 roughly, the 18-day average of closes. British pound, look at the similarity. You see this pattern that we had here? Now you've got it in the pound, and it's slipping back to the 18-day average. Any close under 131.27 will trigger this market, all systems being bearish. Momentum, then the bias would be under the 18-day average, and the trend is defined by the swing line would be down. You'd have to get back over yesterday's highs to negate that pattern, and there's a lot of resistance now up to the 100-day average. You haven't yet set everything down. You need to close under that 18-day average to do it. In the yen, what you have in the world seems to be a risk-on mentality, and as such, they're dropping the yen at this point. It has the fully embedded reading. It bounces away from the embedded reading and just falls back to that lower Bollinger Band. Bitcoin. As I see Bitcoin, higher lows, higher highs over the 18-day average until the market steps back and gets under the 63.15 level. You're putting back into play the possibility of getting to the upper Bollinger Band with support at 64.94, the 18-day average of closes. We then get to the crude oil. Now, it's time for you to leave the November crude versus, let's call it WTI versus Brent, and go to December's for both. And that's what I've done here. And you still see that it's got a bullish bias because you're over the 18-day moving average of closes of the difference of the two. It got down in these contracts just under the $8 level. It's back to $9.42, still favoring Brent. When you come to the November Brent, and I'm going to get rid of this for you tomorrow. I just wanted you to see the last day. It's up at the upper Bollinger Band. Now I've got to leave it. Trading ends in it tomorrow. I know it sounds crazy. We're in September, but they stopped trading that one. Whereas November WTI keeps trading. And it is still bullish with resistance at the upper Bollinger Band. Momentum in the market. Both numbers over 80. Over 80 on Wednesday and over 80 the day before. Your tip-off, I think one of the tip-offs would be if the red line closes back under 80, that's when prices are ready to say, they maybe got too high and time for a correction. Until then, this rules my day. So everything else on the chart doesn't matter to me as much as the slow stochastic. Rebob gasoline, overbought, not embedding, up at resistance, continued pattern of higher lows, higher highs. And again, see, one of the things I like is when you're over that 18-day average, you realize what the bias is and you set up trading rules. In my charting course, I do that, and there's a lot of them. And by the way, in my charting course, if you go to our website at www.iraepstein.com, I just put on a short sale for it. Use the word SAVE, all caps, the number 40. All is one. If you purchase the course, it's $129.95. It drops to $89.95. Be sure you put it into the coupon area and you get it, and it won't last very long on the sale. In the natural gas, ever since we crossed this high, I think I've been adamant in saying I think they caught the shorts in this market. And up and away you've gone. And this is that funny time of year. You don't get a lot of heat, you don't get a lot of cold, yet this market is roaring. Today we saw the injection of nat gas, and it was way less than the market was looking for. I don't know if Hurricane Florence had anything to do with that or not, but you're paying attention to resistance at the upper Bollinger Bands. Want to remind you, you might want to take a good hard look at Linn Research. Now, on this, we cover the research for the financial markets, be it the currency markets, be it the interest rates, be it the stock indices, the metals. We write for people as they're reading it from a technical perspective, from an option trading perspective, hedgers, users, it goes right on through. To see what our customers see and get a couple of weeks sample to it, call our staff. You can go to our website. And by the way, if you go to my website, you'll see the home page. It's got a lot of offerings on it. When you click any of the free offerings, you'll see what you can get, or you can click up here. Save 40. Remember what I just said? I'm Ira Epstein.